So let us take the recording process of the accounting cycle. This is the first step of the accounting cycle. The sequence of the steps in the recording process is that first the transactions are there. Second, the transactions are being recorded in the form of documentation. After the documentation, the journals are being prepared, and the journals are given for posting to the ledgers, and after processing of ledgers, trial balance is prepared, and from the trial balance sheet is prepared. So this is how the data flow will take place. So my dear friends, these are the sequence of steps. First the transactions are recorded, then the documentation takes place, afterwards the journals are being created, from that journals ledgers are created, and extracting the ledgers we create trial balance, and summarizing that trial balance we prepare financial statements. So this is nothing but the recording process. Now the recording process actually starts with the source documents, which is supporting original documents of any transaction. So example, there are sales slip or invoices, we purchase orders, receive reports, and cash slips. So these are nothing but here examples are sales slips or invoices. So so my dear friends, there are examples of sales slips or invoices, check stubs, purchase orders are there. Then there are different receiving reports, cash slips. All these are nothing but the recording processes. So the second step of the recording process is that the analysis of the transaction is being placed into the book of original entry, which is chronological record, that how the transactions effect take place in applicable accounts. So the most common example is nothing but the journal entry. It is nothing but the diary of all events in the entity's life. For example, when the cash is coming, what all expenses are going on, what all sales is coming, what all purchases is going on, uh, whom to whom the material is given on credit, to whom from whom the material is brought on credit. So all these, these are nothing but the transactions, and these transactions are being recorded in the books, and that is nothing but the recording process. So recording process takes place. So the third step is the transactions are being entered into the ledgers. Proper ledgers are being created. Now what is ledger? Ledger posting is there. For example, if here XYZ is the company, and there are suppose three employees. One is suppose Amit, second is John, and third is say for example Salman. So this is nothing but the three employees. If three ledgers are to be created, one of Amit, second of John, and third of Salman. So these ledgers will actually come under the group workers or employees expenses or worker compensation. So this is nothing but the recording process, where we actually create ledgers of different people and different accounts. Remember that the transaction is not entered in just one place, it must be entered in account that it affects. So there is actually interlinking. One account is going to affect another account, another account is going to affect another account. So there is nothing but the transactions are being affecting. So affecting factors should always be taken into consideration. Depending upon the nature of organization, analysis of transactions should occur continuously or periodically. So if there are suppose some consistent entries are there, so for example, if the rent is to be paid on per month basis, so these entries will be recorded on per month. If you are selling any kind of product every day, so the sale purchase entries are consistent entries, which everyday transaction effect will take place. For example, if you are paying anyone, then accordingly that will affect the transactions. So this is how the recording process is going to play. So the fourth step, which includes in the recording process, is nothing but the preparation of trial balance. So which is the simple listing of all accounts from the ledger with the balances. So see, this is nothing but the in the recording process, when all the ledgers are being posted from the ledgers, there is a standard format of creating a trial balance. So after that process, we have to prepare the trial balance. Actually it helps in verifying the accounts and preparing of financial statements, and it is necessarily prepared when required. So trial balance is an essential factor, and how we can work with it we'll see in the upcoming slides to come in more detail. And the final statements are the financial statements, which are required The company's financial statements are nothing but the profit balance sheets, profit and loss statements, and the trading statements, profit and loss and the trading statements. So these are nothing but the we can say these are the recording process statements which are required. So how it works will be looking in the upcoming slide to come, how the journal, ledger and trial balance are being placed.